As I first reported yesterday, right here on CNBC on Worldwide Exchange, Charles Schwab is in talks to acquire TD Ameritrade. If that deal happens, it would consolidate an industry that has been facing massive disruption. Sarat Sethi is here. Mike Santoli is too. They're back with us to talk more about it. And Sarat, I know this is an industry that you know pretty well. How involved are you?
We do. So of the $6 billion that we manage, we have over $2 billion at Schwab as a custodian, and we have a few $100 million at TD as well. And for full disclosure, we own the Schwab stock for our clients. I own it personally. And then we also have a couple of billion at Fidelity Investments, which is privately held. And I've been serving on their advisory board for many years. So this is something that we know pretty well.
Is this a deal that makes sense to you?
So I think what happened is, as you reported a few weeks ago, Schwab cut trading fees, and they were the first ones to do it. I think what's happened is going from defense, now they're going to offense. And it's really a consolidation of complementary assets. Schwab has about 30% of its revenue coming from asset management. TD is about 10%. So I think if you're Schwab, you're looking at a big potential there of complementary synergies on the revenue side that I think Schwab can do really well because they have a lot more managed money than TD does. And the other side, if you're looking at the cost-cutting side, you have pretty much similar technology as well. So you've got customer bases and clients like us that are sharing both. And I think if you get the synergies on both sides, especially given that TD has about 25% of its revenue coming from trading, which is going to zero. So you can't see it from their side. The question is, how big do they become? And do the regulators then say, wait, you guys are controlling 45% of the business?
Would it affect you as a customer?
No, it really wouldn't. And in fact, for us, it would just make things a little bit simpler because we'd be using one party. We do use Fidelity. We have a couple of others as well. So the question would be, does it provide any more value to our clients who are really the customers? And I think maybe there'll be more money spent on technology and more services.
What would be a fair price?
So, I think when you look at it...
Because that's what's up in the air right now,
right,
still.
Right, and it's a question of what is Schwab going to pay for given kind of day one, and then what are the expected synergies? I mean, if you look at, I think they'll get mid-teens accretion based on a 20% rise in the stock, which was reflected yesterday. But a lot of that has to go right. That means TD, which is owned 40% by TD Bank North, they have to basically relinquish the control because what Schwab's also looking at, Schwab's a bank now, so They make a lot of their money sitting in cash and not just in mutual fund cash, but in bank cash. So that has to go right, and I think you might get some more negotiation because if this doesn't happen, I think TD is going to be in play for some other player, and then you've got E-Trade on the same side, too.
I was going to say, is TD in play or is E-Trade kind of...
Well, I think they would both be. I think a lot of them are looking at, E-Trade is also more self-directed as well, so is TD. But a lot of these players like Schwab, and you might get somebody else come in there looking for wealth management business because that's really the highest return on investment, and then you add the cash value of it, too. And then if you expand the pie for a lot of these customers, because most of them don't have all their capital at TD or Schwab. They have money elsewhere, too. And that's really kind of another area. And Schwab's done a great job in that business. They have actually become kind of what the Merrill Lynch's were years ago, where you've got self-directed
trading. At this point,
trading.
you think the deal has to happen because if is there a price at which is a problem for them? Because I think they're actually now forced to do the deal.
Obviously, there's going to be some price, but if TD says, we're up 20% and we want 40, I think Schwab would walk away. They've already got another acquisition, USAA, that they paid $1.8 billion for cash that they're still trying to digest at this point. So there's a lot on the table for Schwab. They've got a lot of opportunities, but I think the market is telling you they like this deal.
Yeah, exactly. I mean, the fact that the market took Schwab up yesterday,
no, that
if it's a stock deal, stock deal, Schwab automatically has more cash at hand that they can pay for.
They've already been able more easily pay for it.
And what's interesting is if you look at the prior bank deals, the acquirer stocks have not been going up for stock deals. So the market has been telling banking stocks, which everybody thinks, including us, is cheap. And now you quote an asset management play saying, wait, we're seeing more synergies in this market, and you've got kind of two people combining. And really after that, there's no publicly traded behemoth. Yeah, you've got Morgan Stanley, Goldman Sachs. They do, different things similar, but I think that would be good for the industry as well because you'll see more of a consolidation and better for the customer. I mean, our customers are doing better because there's no trading fee now, right? So you really have to say, how is this going to affect returns? And then Schwab's got a lot of other things that they have. They've got their own mutual funds. They've got their own products in there. So I think they're looking at, hey, we can get this at a cheaper price than it was, 6 months ago.
It's a massive acquisition of accounts and a huge cost save. To me, that's the way I see it. You're not buying really a brand. The active trader business, everybody coveted for years. Now it's a little bit worth a lot less because you're not charging basic commissions. But that's a significant thing because the cost of customer acquisition is tremendous.
The risk on this is execution. Is it
on the Schwab side?
On the Schwab side, or anyone taking it, right?
Because they're both strong brands. They're both strong.
They're both
businesses.
strong
It's not like you have
brands.
a weak business.
Right? Are you going to have customers that go somewhere else that say, "Wait, I don't want to be part of this"? And then how do you even deal with the customers? Because the TD customers never really had a lot of people talk to them, right? They've kind of been self-directed, and now all of a sudden somebody comes in. Will they move to somebody else? And I think a lot of this is done because of the robos. Right? I mean, you've got the Robin Hoods and the Betterments of the world, but Schwab has that too. Schwab has their own robo-advisor as well. So I think this is an interesting play also now being on the offense, kind of what they did with cutting commissions, but now they're saying to the players that are getting funded by venture, hey, we make real money. Market likes real money at this point, as we've seen in any publicly traded company. So I think this will be an interesting kind of shot across the bow for all the other players to say, we're really going to be the behemoth of this business.